now move on directly into the markets. We did see the market gain about 1.4% last week, and today we are seeing it beginning to shed some of those early gains. It was down about 0.2% today, closing at 36,857 points for the NSE All Share Index. We did see heavy trading though in shares of Lafarge Wapco, and right now Sam Ine, stockbroker at TFS Securities, is standing by to talk us through the day's trade. Thank you so much, Sam, for joining us. So like I did mention, I think a big takeaway today is that volumes are up, but largely driven by those deals we saw in Lafarge Wapco. And we know that earnings season should be upon us in another few weeks. So your thoughts about why we're seeing strong interest in Lafarge Wapco at this time?
Just like you said, it has to do with the earnings season. The cement industry in Nigeria has been on the uptrend. The demand for the product has been good. The companies in the sector did report good returns in the second quarter, particularly Dangote Cement and Lafarge Wapco, which you mentioned. So I think basically investors are taking position in expectation of good third quarter result.
Right. Okay. So your thoughts about the attractiveness of that sector? Maybe we can start with that. Cement companies right now, given their valuations, do you get a sense that investors are still very bullish?
Yes. If you look at it, government is really pushing for more of affordable housing. Private individuals are really investing in that sector to be able to increase the turnout of affordable homes. And then the road construction is also taking a good interest in the federal government's budget. We are aware that a great work is being done on Lagos, Ibadan, Oshodi, Apapa, and all of these require good utilization of cement as a factor input. And we know that Wapco's products is very, very good for construction. And so I understand that well-informed investors are taking note of these developments in the sector and are taking appropriate position.
All right, let's look at a few of the losers today. We had flour mills, Nigerian breweries finally falling back a little bit, and interestingly, we have seen some interest in the brewery sector, particularly last week. And your thoughts about the interest we're seeing? Do you get the sense that this is the beginning of a bear run for these stocks, particularly for Nigerian breweries?
Traditionally, the result for Nigerian breweries is not too good at the third quarter. The reason is obvious. You're talking about a season that's been characterized by rains, and then the weather is cold and the demand for the product is not usually high. So assuming that this historical trend continues, we expect that their third month result may not be too wonderful. And so people who have looked at this historical pattern may want to, be off the stock temporarily. But if you look at the chart, Nigerian breweries, presently it's at the overbought region, both on stochastic indicator and the relative strength index indicator. So you would naturally expect that the stock price will take a little bit
All right, I seem to have lost you there. Steve? Hello, Steve, are you there? Okay, I think we're having a bit of a challenge with that link to the NSE. Okay, I think we have Steve back now. Steve, are you there?
Yeah.
Oh, sorry, Sam. Excuse me, Sam. All right, so where do you see value, though, in this market right now? Where do you think investors should be putting their money?
I think investors basically have to look at those stocks that have really been down because of the last bearish trend. We're looking at stocks like International Breweries, I'm trying to remember some of them, Owando, and Ashaka Cement. These stocks are really taking the hit with the last bearish run, and it has created value for investors who really can see it.
And
so
in order to take a little more risk, would you put any bets in the insurance sector, for instance?
For now, like I said in previous interviews, I still need to see good fundamental position in the insurance sector before I really look into that sector.
We are seeing some results now. I mean, Custodian and Allied did report on Friday, and pretty decent numbers.
Let me go first to the ICO result. I remember when the ICO result came, it was a bit good, but analyzing the results, I could see some indications that suggest that I need to wait further. I have not really looked into Custodian and Allied general results, critically. But basically, the insurance sector as a whole, it's an area we need to be very, very cautious on.
All right, and I get the sense you are perhaps also cautious on the banking sector.
Exactly.
I think that's something I've seen with brokers, with analysts over the last 2-3 months, given what we've seen in terms of the central banks and other the regulations that are impacting earnings going forward, and of course the tightening of monetary policy. It hasn't worked out positively for them in terms of the impact on earnings. So your thoughts about the banks, because some people will still suggest that some are still trading at below book value. They still look like at least on a valuation play a reasonable buy.
You know that basically the price of any security is a summation of fundamental indicators, technical analysis, and the perception of investors, and then the projections that you could make. So if you look at the current happening, just like you've highlighted them, they are not too good for the sector as at now. So investors are a bit shy of it and probably want to wait and see what the result turns out when we see the 9 months earnings result, to be able to do a re-evaluation even of those fundamental valuation that has been done with previous figures. So basically, one will need to get the 9 months result, and then take into cognizance the recent indicators, and then do another projections to be able to recalculate what the fundamental valuation will do. So simply saying that it's below book value is something that has to be re-examined and recomputed based on, say, what the 9 month result will be. So for now, it makes a whole lot of sense to be shy of the banking securities at the moment.